AI isn't just a trend, it's the biggest wealth opportunity of this decade. So, how are ordinary people using AI to build income streams and even reach millionaire status? And what opportunities are still wide open right now? In this audiobook, I'll break down the key lessons from how AI can make you a millionaire, including practical ways to use AI for business, content creation, and scalable income. Feeling overwhelmed by all the AI tools and hype online? You're not alone. Most people don't know where to start or what actually works. Stick till the end, and you'll have a clear roadmap to start using AI smartly so you can build income streams and move closer to financial freedom. Somewhere in New York, inside a quiet office filled with screens, a machine is trading. No emotions, no hesitation, no fear. It scans thousands of data points in milliseconds. It detects patterns invisible to the human eye. It executes trades with precision that no human can match. And here's the truth most people don't realize yet. This is no longer the future. This is happening now. Artificial intelligence has quietly entered the financial markets, and it is reshaping how money is made. The old game, manual analysis, emotional decisions, guesswork, is being replaced by speed, data, and automation. And just like every major shift in history, those who understand it early position themselves differently from those who ignore it. But this is not just about technology. It is about leverage of intelligence. In the past, wealth in markets was built through access to information, access to capital, access to networks. Today, AI is beginning to democratize something far more powerful: decision-making advantage. Imagine this: a beginner trader spends hours analyzing charts, trying to identify patterns, second-guessing entries, exiting too early, or holding too long. At the same time, an AI system processes years of market data instantly, recognizes probabilistic setups, and executes without hesitation. One is driven by emotion, the other is driven by logic. And over time, logic compounds. This is why AI trading is not just a trend, it is a structural shift. In the United States, hedge funds and institutional firms have been using algorithmic trading for years. High-frequency trading firms execute millions of trades in fractions of seconds. Quant funds build models that adapt to changing market conditions. This is not new at the top level. What is new is access. Today, individual traders can use AI-powered tools, automated strategies, and data-driven systems that were once available only to large institutions. The playing field is not perfectly equal, but it is closer than ever before. And with that shift comes opportunity. But here is where most people misunderstand. AI trading is not a magic button. It is not a shortcut to instant wealth. It is not something you plug in and forget. AI is a tool. And like every powerful tool, it amplifies the person using it. If you lack discipline, AI will accelerate your mistakes. If you lack understanding, AI will create false confidence. If you chase quick profits, AI will expose that impatience faster than anything else. But if you approach it with structure, clarity, and long-term thinking, AI becomes something extraordinary. It becomes a system that removes emotional error, increases consistency, and allows you to operate at a level previously impossible for individual traders. This is why AI trading has the potential to create millionaires. Not because it guarantees profit, but because it enables scalable, disciplined execution. Think about this carefully. Most traders fail not because their ideas are wrong, but because their execution is inconsistent. They enter late, they exit early, they override their plans, they react emotionally. AI removes that inconsistency. It executes exactly as designed. Consistency is where wealth is built. And AI, when used correctly, is a consistency machine. But here is the deeper shift. AI changes not just how you trade, but how you think about trading. It forces you to move from guessing to designing, from reacting to structuring, from chasing outcomes to building systems. You are no longer just a trader, you become a system builder. And system builders operate differently. They think in probabilities. They focus on process. They optimize over time. They treat trading as engineering, not gambling. This is the mindset that separates those who use AI as a gimmick from those who use it as a wealth-building engine. Because AI does not reward curiosity, it rewards clarity. And as you move through this audiobook, you will begin to see how AI trading is not about replacing humans. It is about enhancing disciplined decision-making. It is about removing the weakest part of trading, emotional inconsistency, and replacing it with structured execution. But before you can use AI effectively, you must understand something deeper. The biggest limitation in trading has never been technology. It has always been human psychology. Technology has never been the real barrier in trading. Not lack of charts, not lack of indicators, not lack of data. The real barrier has always been the human mind. Before AI, traders blamed their losses on the market. After AI, many will blame the tools. But the truth remains unchanged. Most traders fail not because they lack tools, but because they lack alignment. Imagine this scenario. A trader in California subscribes to an AI trading system. It has been back-tested. It has shown consistent results. It has clear rules. The system signals an entry. But the trader hesitates. What if this one fails? They skip the trade. That trade wins. Now regret appears. The next signal comes. The trader jumps in aggressively, this time increasing position size. That trade loses. Panic follows. They turn off the system. The AI did not fail. The trader did. This is the central problem AI cannot fix on its own. It can process data, it can execute logic, but it cannot override your beliefs, your fears, or your impulses, unless you allow it to operate without interference. And that is where most people struggle. They want control. They want certainty. They want to feel the trade. But the moment you start interfering emotionally with a structured system, you destroy its edge. This is why AI trading demands something deeper than technical knowledge. It demands psychological discipline. Mark Douglas in The Disciplined Trader explained that consistency comes from thinking in probabilities and executing without emotional attachment. AI embodies that philosophy perfectly. It does not hesitate. It does not hope. It does not fear. It simply executes. The question is, can you allow it to? Because most traders don't fail due to lack of intelligence. They fail because they override systems at the worst possible moments. They trust the system when it wins. They doubt it when it loses. They change parameters emotionally. They abandon strategies too early. This behavior is not logical. It is psychological. Let's bring this into a real-world context. In the US stock market, countless retail traders use automated tools. But during periods of volatility, like sudden market drops or unexpected news events, many intervene. They close positions early. They pause systems. They override signals. And often, those interventions reduce performance significantly. Why? Because humans are wired to avoid pain, not to follow probability. AI, on the other hand, has no pain response. It does not interpret losses as failure. It does not interpret wins as validation. It operates purely within the logic it was designed with. This is why AI trading works best when humans shift from being operators to supervisors. You are not there to react to every trade. You are there to design, monitor, and refine the system. This shift is uncomfortable. It feels like giving up control. But in reality, it is gaining a different kind of control. Control over structure instead of outcome. And this is where most people break, because letting go of emotional control requires trust. Trust in the system, trust in probability, trust in long-term outcomes over short-term feelings. Without that trust, AI becomes just another tool misused by human emotion. There is a quote often repeated in trading circles. The strategy is not the problem, the trader is. AI exposes this truth even more clearly, because when a system is logical and consistent, any inconsistency that remains comes from the human interacting with it. This is why AI trading is not just a technological evolution, it is a psychological one. It forces you to confront your need for control, your fear of loss, and your attachment to being right. And if you can overcome those, something powerful happens. You stop interfering, you stop guessing, you stop reacting, you start trusting process. And when process is trusted, consistency emerges. To most people, AI feels like magic, a black box, something mysterious, almost intimidating. You press a button and somehow decisions happen. Trades appear, profits or losses follow. But this perception is dangerous because what you don't understand, you cannot control. And what you cannot control, you will eventually distrust. The disciplined AI trader removes the mystery. They see AI not as magic, but as structured logic at scale. At its core, an AI trading system is not thinking like a human. It is not predicting the future. It is not guessing. It is doing something far more powerful. It is identifying patterns in data and assigning probabilities to outcomes based on historical behavior. That's it. No intuition, no emotion, no ego, just data, logic, and execution. Imagine a trader in Chicago analyzing charts manually. They look for patterns, support levels, breakouts, trends. Now imagine an AI system doing the same thing, but instead of looking at a few charts, it scans thousands. Instead of analyzing recent patterns, it processes years of data instantly. Instead of remembering selectively, it remembers everything. The difference is not intelligence, it is scale and consistency. AI systems are built on models. These models are trained using historical data. They learn relationships between variables, price movements, volume, volatility, news sentiment, macroeconomic indicators. Over time, they begin to recognize conditions that historically led to certain outcomes. But here is the key insight. AI does not know the future. It only understands probability better than humans. This is why AI trading is not about being right every time. It is about being right consistently over many trades. The same principle Mark Douglas emphasized, but executed without emotional interference. There are different types of AI systems in trading. Some are rule-based algorithms. Others use machine learning to adapt over time. Some focus on short-term patterns, executing trades within seconds. Others analyze long-term trends, holding positions for weeks or months. But all of them share one thing. They operate within a defined structure. This is where many beginners go wrong. They expect AI to be perfect. They expect it to win every trade. They expect it to remove risk completely. That expectation is not just wrong, it is dangerous. Because the moment the system produces losses, trust breaks. And when trust breaks, interference begins. The disciplined trader understands that losses are part of the system. They do not judge the AI based on individual outcomes. They evaluate it based on long-term performance. This is a critical shift. You are no longer asking, did this trade win? You are asking, is this system performing as expected over time? That shift transforms how you interact with AI. Instead of reacting to every result, you observe patterns. Instead of chasing perfection, you optimize consistency. Instead of fearing losses, you manage risk. This is how institutions operate. In the United States, quantitative hedge funds don't panic after a losing day. They analyze performance over months, sometimes years. They trust the system because they understand it. And that understanding removes emotional noise. For individual traders, this is the missing link. When you understand how your AI system works, you stop seeing it as a black box. You start seeing it as a tool, one you can evaluate, refine, and trust. And trust is everything, because without trust, you interfere. And when you interfere, you break the system. Think about this carefully. If you had a system that wins 60% of the time over 1,000 trades, would you abandon it after 5 losses in a row? Most people would. Not because the system is broken, but because their emotions cannot handle short-term variance. AI does not have that problem, but you do, unless you train yourself to think differently. This is why understanding the structure behind AI is not optional. It is essential. It allows you to separate performance from emotion. It allows you to evaluate objectively instead of reacting subjectively. And once you reach that level of clarity, something changes. You stop fearing the system. You stop expecting perfection. You start thinking like a professional. Every trader remembers their worst mistake. Not a bad strategy, not a lack of knowledge, but a moment, a single decision driven by emotion. Holding too long, exiting too early, doubling down after a loss, ignoring a stop, chasing a move out of fear of missing out. These moments don't come from ignorance, they come from being human. And over time, they cost more than any strategy ever could. This is where AI changes everything, not because it predicts better, but because it does not feel. AI does not hesitate before entering a trade. It does not panic during a drawdown. It does not get greedy after a win. It does not revenge trade after a loss. It simply executes. This is what makes AI so powerful. Not intelligence alone, but emotional neutrality at scale. In traditional trading, even the best strategies fail when emotions interfere. A trader may have a profitable system on paper, but real-world execution destroys it. Why? Because fear causes hesitation, greed causes overexposure, hope causes denial. AI removes this entire layer. Imagine a trader in New York watching the market drop rapidly. Panic spreads, news headlines flash, social media explodes with fear. The trader feels pressure to act, to exit, to protect, to escape uncertainty. At the same time, an AI system continues operating based on its rules. If the system is designed to hold, it holds. If it is designed to exit, it exits. It does not care about headlines. It does not interpret noise. It follows structure. And over time, that consistency creates an advantage. Because most losses in trading are not caused by bad strategies. They are caused by inconsistent execution. AI solves this problem directly. But here is the paradox. While AI removes emotional mistakes, it introduces a new challenge: trusting a system you cannot feel. Humans are wired to trust what they experience emotionally. If something feels right, we trust it. If something feels uncomfortable, we doubt it. AI operates outside that framework. It does not provide emotional reassurance. It provides logical consistency. This is why many traders struggle with automation. They see a trade going against them and feel the urge to intervene. They see a profit and feel the urge to secure it early. They see a losing streak and feel the urge to stop the system. But these urges are exactly what AI is designed to eliminate. The moment you override the system based on emotion, you reintroduce the very problem AI was meant to solve. This is why disciplined AI trading requires a different mindset. You are not trading every position, you are managing a process. Your job is not to react. Your job is to allow execution. This shift is uncomfortable at first. It feels passive. It feels like giving up control. But over time, it becomes liberating, because you no longer carry the emotional burden of every decision. You are not second-guessing entries. You are not stressing over exits. You are not riding emotional highs and lows. You are observing, evaluating, and refining. This creates a completely different trading experience. Calm replaces chaos. Structure replaces impulse. Consistency replaces randomness. And consistency is where wealth is built. In the United States, many institutional traders rely heavily on automated systems for this exact reason. Not because humans are incapable, but because humans are inconsistent under pressure. AI ensures that the strategy is executed exactly as designed, regardless of market conditions. But remember this clearly: AI does not remove risk, it removes emotional error. And that distinction matters, because if your system is flawed, AI will execute that flaw perfectly. If your risk is too high, AI will amplify that risk consistently. This is why discipline still matters. This is why understanding still matters. AI is not a replacement for intelligence. It is an amplifier of structure. And when structure is strong, AI becomes a powerful ally. In traditional trading, there is a ceiling, a limit that most traders never talk about openly. It is not a limit of knowledge, not a limit of strategy. It is a limit of human capacity. You can only watch so many charts. You can only process so much data. You can only make so many decisions before fatigue sets in. And fatigue is where mistakes begin. This is why even skilled traders struggle to scale. As they increase activity, complexity increases. As complexity increases, emotional pressure rises. As pressure rises, discipline weakens. This creates a bottleneck. No matter how good you are, you remain limited by your own attention, energy, and emotional endurance. AI removes that bottleneck completely. It does not get tired. It does not lose focus. It does not experience decision fatigue. It can monitor hundreds of markets simultaneously. It can execute multiple strategies across different timeframes. It can adapt instantly to changing conditions without emotional hesitation. This is where AI trading shifts from being a tool to being a multiplier. Because in trading, wealth is not built from one perfect trade. It is built from consistent execution at scale. Imagine a trader in San Francisco manually trading a single strategy on one asset. They might take a few trades per week. Their results depend on their focus, timing, and emotional state. Now imagine an AI system running 10 strategies across multiple markets, stocks, forex, crypto, simultaneously. Each strategy has a small edge. Individually, the edge is modest, but combined, executed consistently, and scaled over time, the results compound. This is how institutions operate. They do not rely on one big idea. They rely on many small edges executed relentlessly. And AI makes this approach accessible. But here is the deeper insight most people miss. Scaling is not just about increasing trades. It is about increasing consistency across time. When you remove emotional inconsistency, every edge becomes more reliable. Every system performs closer to its true potential. Variance still exists, but it is no longer distorted by human error. This is where real wealth begins to form, because compounding requires consistency, and consistency requires discipline. AI bridges that gap. But scaling introduces its own challenges. More trades mean more exposure. More exposure means more risk. If not managed properly, scaling can amplify losses just as easily as profits. This is why disciplined AI traders focus on risk distribution, not just trade frequency. They allocate capital carefully. They diversify strategies. They control drawdowns. They treat scaling as a system, not an impulse. In the United States, quantitative funds operate with this exact philosophy. They don't chase massive gains from a single position. They build portfolios of strategies that work together, balancing risk and return. This is not exciting, it is not dramatic, but it is effective. And effectiveness is what creates long-term wealth. There is a quote often repeated in finance: "Big money is not made in the buying or the selling, but in the waiting." With AI, this quote evolves. Big money is not made in one decision. It is made in thousands of consistent decisions executed without error. This is what AI enables. It transforms trading from a series of emotional events into a structured system of repeated execution. And once you reach that level, something changes. You stop thinking about individual trades. You start thinking about systems. You stop chasing outcomes. You start managing processes. This is the mindset of scale. There is a dangerous illusion that forms the moment people hear about AI trading. It sounds something like this. If the system is smart enough, risk disappears. This belief is not just wrong, it is catastrophic. AI does not eliminate risk. It accelerates exposure to it. And that distinction is where most people either build wealth or lose everything. In traditional trading, human limitations act as a kind of safety barrier. You hesitate, you miss trades, you get tired, you slow down. These limitations reduce both your profits and your potential damage. AI removes those limitations. It executes instantly. It scales effortlessly. It repeats decisions without hesitation, which means one thing. If your system is strong, AI accelerates success. If your system is weak, AI accelerates failure. There is no middle ground. Imagine a trader in Texas who builds an AI system without fully understanding risk. The system performs well in backtesting. Early results are positive. Confidence grows. Position sizes increase. Capital is scaled aggressively. Then market conditions change. The system enters a drawdown, something completely normal in any probabilistic model. But now, because of scale, the losses are larger. Emotion returns. Panic begins. The trader intervenes, shuts down the system at the worst possible moment, right before recovery. The result is not just loss, it is amplified loss. This is the risk illusion. People assume AI reduces danger because it feels more advanced. But in reality, AI simply removes friction. And when friction disappears, outcomes, good or bad, happen faster. This is why risk management becomes even more critical in AI trading than in manual trading. The disciplined trader does not start with profit. They start with downside control. Before scaling a system, they ask, what is the maximum drawdown? How much capital is exposed at any moment? What happens during extreme market conditions? These questions are not exciting, but they are essential. Because wealth is not built by maximizing wins. It is built by surviving losses. In the United States, hedge funds spend enormous effort on risk management, not because they don't trust their systems, but because they understand one truth deeply. Even the best system will lose sometimes. And when it does, survival matters more than performance. This is where most individual traders fail. They focus on optimization, tweaking parameters, chasing higher returns, improving win rates. But they ignore the foundation, controlling risk. AI magnifies this mistake. A system with a small edge but poor risk control can wipe out an account quickly when scaled. A system with moderate returns but strong risk control can compound steadily over time. The difference is not intelligence, it is discipline. There is a powerful principle in trading. If you protect your downside, the upside will take care of itself. AI does not change this principle. It makes it more important. Because when execution becomes perfect, the only remaining variable is how much you risk. This is why disciplined AI traders think differently. They do not chase the highest returns. They build systems that can survive worst-case scenarios. They accept lower short-term gains for long-term stability. They prioritize consistency over excitement. This mindset feels slow, but it is powerful, because compounding only works when you stay in the game. And AI gives you the ability to stay in the game longer if you respect risk. But it will remove you from the game faster than anything else if you ignore it. This chapter is not about fear, it is about clarity. AI is not dangerous. Misused AI is. At the beginning of this journey, you see yourself as a trader, someone who enters positions, watches charts, reacts to movements, and tries to make the right decision at the right time. Every outcome feels personal. Every trade feels like a test. But AI does not reward this identity, because AI does not need a reactive trader. It needs a designer. This is the shift that separates those who struggle with AI from those who build wealth with it. You stop being the person who executes trades and become the person who builds the system that executes them. This is not just a technical change, it is a psychological transformation. A trader asks, "Should I enter this trade?" An architect asks, "Under what conditions should any trade be entered?" A trader asks, "Should I exit now?" An architect asks, "What rule defines every exit regardless of how I feel?" This shift removes emotion at the root level. Instead of fighting impulses in real time, you design a system where impulses have no role. You move from reacting to structuring, and structure creates consistency. In the United States, this is how quantitative firms operate. The people building trading systems are not sitting there reacting to every price movement. They are designing frameworks. They are testing logic. They are optimizing parameters. Once the system is live, their role is not to interfere, it is to monitor and refine. This is what you become when you use AI correctly. You are no longer chasing trades, you are managing a machine. This changes how you think about everything. You stop obsessing over individual outcomes. You focus on system performance over time. You stop asking, "Was this trade good?" You ask, "Is the system behaving as expected?" This mindset removes emotional noise completely. Because once you operate at the system level, individual trades lose significance. They become data points, not events. And when events lose emotional weight, discipline becomes natural. But this shift is uncomfortable because being an architect requires patience. It requires thinking long-term. It requires accepting that results come from systems, not moments. Many people resist this. They want action. They want excitement. They want to feel involved. But involvement is often the problem. The more you interfere, the more you distort outcomes. The more you react, the more you break structure. The disciplined AI trader learns to step back. They trust the system they built. They observe instead of react. They refine instead of override. This is where true power lies. Because once you operate at the system level, your potential expands dramatically. You can run multiple strategies. You can diversify across markets. You can scale without increasing emotional stress. You are no longer limited by your own attention or emotional capacity. You have moved beyond trading. You are now building financial machines. And machines, when designed correctly, do something extraordinary. They work without emotion. They operate without fatigue. They execute without hesitation. This is how wealth scales, not through effort alone, but through systems that multiply effort. This chapter marks a turning point. You are no longer learning how to trade. You are learning how to design trading. And once that shift is complete, everything becomes clearer. In a world obsessed with speed, patience feels outdated. Markets move fast. News spreads instantly. Prices react in seconds. And AI, with its incredible processing power, seems to reinforce this idea. Faster decisions, faster execution, faster profits. But here is the paradox most people miss. The real edge in AI trading is not speed, it is patience. Speed is already solved. Machines are faster than you will ever be. They analyze quicker, execute faster, and respond instantly. Competing on speed is pointless, but patience. Patience is where humans still have control. And patience is what determines whether AI becomes a wealth-building machine or a chaotic experiment. Most people approach AI trading with urgency. They want quick results. They want immediate profits. They want validation that the system works. So they rush. They deploy systems too early. They scale too aggressively. They judge performance too quickly. And in doing so, they sabotage the very advantage AI provides. Because AI systems are built on probabilities. And probabilities only reveal themselves over time. Imagine a trader in New Jersey launching an AI strategy. The first week shows small gains. Confidence rises. The second week shows losses. Doubt appears. The trader tweaks the system, changes parameters, adjusts risk. The third week produces mixed results. Frustration builds. The system is abandoned. The problem was not the AI. The problem was impatience. This is one of the hardest lessons to internalize. A system can be profitable over 1,000 trades and still look broken over 20. Without patience, you never reach the point where the edge becomes visible. This is why disciplined AI traders think in time horizons, not short-term outcomes. They evaluate systems over months, sometimes years. They allow data to accumulate. They let performance stabilize. This patience creates clarity. Instead of reacting to noise, they observe trends. Instead of chasing quick wins, they build long-term consistency. This is how institutions operate. In the United States, quantitative funds do not abandon strategies after a bad week. They understand variance. They expect drawdowns. They measure performance over large sample sizes. This mindset is what allows them to stay in the game long enough for compounding to work. Because compounding is not dramatic. It is quiet. It is slow. It is relentless. And patience is what allows compounding to unfold. AI amplifies this effect. When a system executes consistently over long periods, small edges begin to stack. Gains accumulate. Risk is controlled. Growth becomes exponential, not because of one big win, but because of thousands of disciplined decisions. But none of this happens without patience, because impatience leads to interference. Interference leads to inconsistency, and inconsistency destroys compounding. This is why patience is not passive. It is active discipline. It is choosing not to act when emotion demands it. It is choosing to wait when uncertainty feels uncomfortable. It is choosing to trust the system when short-term results are unclear. This is where most people fail, not because they lack intelligence, not because they lack tools, but because they lack the ability to wait. And waiting in a probabilistic system is where the real advantage lies. The disciplined AI trader understands this deeply. They do not rush success. They build it. They do not chase outcomes. They allow outcomes to emerge from process. They do not seek excitement. They seek stability. And over time, this approach produces something powerful, predictable growth. Not in the sense of certainty, but in the sense of consistency. This chapter is a reminder that AI does not replace discipline. It magnifies it, and patience is one of the purest forms of discipline. There is a fear that quietly sits in the background whenever people hear about AI, a fear that machines will replace humans, that automation will remove the need for skill, that technology will take over entirely. In trading, this fear shows up in a different form. If AI is so powerful, what role do I even play? The answer is not what most people expect. AI does not replace you, it redefines you. Because while AI is exceptional at execution, pattern recognition, and data processing, it still lacks something critical: context, judgment, adaptability at a human level. AI operates within the boundaries it is given. Humans define those boundaries. This is why the most powerful approach to trading is not human versus machine. It is human with machine. Think about how this works in real life. A trader in Boston uses AI to scan markets and identify high-probability setups. The system processes massive amounts of data instantly. It generates signals based on structured logic. But the trader does something AI cannot fully replicate. They understand broader context. They evaluate macro conditions. They recognize when environments shift in ways data has not fully captured yet. They decide when to deploy the system and when to step back. This combination creates strength. AI handles execution and consistency. Humans handle judgment and adaptation. Together, they form a system far more powerful than either alone. This is exactly how many institutions in the United States operate today. Quantitative models generate signals. but human oversight remains. Not to interfere emotionally, but to ensure the system is operating within the right environment. This balance is critical because pure human trading is inconsistent, and pure automation without understanding can be dangerous. The edge lies in integration. But here is where most individuals go wrong. They either rely completely on AI without understanding it, or they constantly override it based on emotion. Both approaches fail. The disciplined AI trader finds the middle ground. They trust the system, but they also understand it. They allow execution, but they monitor performance. They avoid emotional interference, but they remain aware. This creates a stable relationship between human and machine, and this relationship evolves over time. In the beginning, you may feel the urge to control everything, to check every trade, to question every decision. But as trust builds, something shifts. You step back, you observe more, you interfere less. Eventually, your role becomes clear. You are not there to trade, you are there to manage the system that trades. This is a completely different level of thinking, and it unlocks something powerful. Because once you operate at this level, you are no longer limited by your own time or emotional capacity. You can scale systems. You can diversify strategies. You can build multiple streams of automated execution. You move from trading income to building trading infrastructure. And infrastructure is what creates long-term wealth. There is a quote often associated with the evolution of technology. Technology doesn't replace humans. It replaces humans who don't use technology. In trading, this becomes even more precise. AI will not replace disciplined traders. It will replace undisciplined ones. Because discipline is what allows you to use AI correctly. Without it, AI becomes chaos. With it, AI becomes leverage. This chapter is not about choosing sides. It is about integration. Understanding where AI excels, understanding where you add value, and combining both into a unified system. That is the future. At the beginning of this journey, the idea sounded simple. AI trading can make you a millionaire. It felt exciting, powerful, almost effortless. But now, after everything you've seen, the psychology, the structure, the risk, the patience, the system design, the truth is much clearer. AI does not make you a millionaire. The system you build with AI does. And that system is not just technology. It is a combination of mindset, structure, discipline, and execution working together over time. Most people search for shortcuts. They want the perfect strategy, the perfect AI tool, the perfect signal. But wealth is not built on perfection. It is built on consistency applied over time. This is the final shift. You stop asking, how do I make money quickly? You start asking, how do I build a system that works for years? Because millionaires are not created by moments, they are created by processes. Think about how this unfolds in real life. A trader in Los Angeles builds a simple AI system. Nothing extraordinary, a modest edge, controlled risk, consistent execution. At first, the results are small, almost unimpressive, but the system runs. Day after day, week after week, month after month. Losses happen, drawdowns appear, but the structure holds. The trader does not interfere. They refine slowly. They scale carefully. Over time, something begins to happen. The curve starts to rise. Not dramatically, not suddenly, but steadily. This is compounding in action, and compounding is where wealth lives. The difference between someone who earns occasional profits and someone who becomes wealthy is not intelligence. It is not luck. It is time combined with consistency. AI enables consistency. It removes emotional error. It executes without hesitation. It scales without fatigue. But it is your responsibility to build the environment where that consistency can survive. That means controlling risk. That means being patient. That means trusting the system during difficult periods. Because the hardest part of building wealth is not starting. It is continuing when results are uncertain. This is where most people fail. They stop too early. They change too often. They chase something new before the old system has time to work. The disciplined AI trader does the opposite. They stay consistent. They refine gradually. They trust long-term outcomes over short-term emotions. This is what creates exponential growth. Not one big trade, not one lucky moment, but thousands of disciplined executions stacked over time. There is a powerful realization here. The goal is not to beat the market every day. The goal is to build a system that survives long enough to win over time. Once you understand this, everything changes. You stop chasing excitement. You stop reacting to noise. You stop needing constant validation. You focus on process, and process builds wealth quietly. This is what separates those who experiment with AI from those who build financial freedom with it. One treats it as a tool for quick gains. The other treats it as a foundation for long-term systems. Only one of those paths leads to sustainable wealth. And that path requires something simple but rare: discipline. Because in the end, AI is not the edge. You are. Your ability to think long-term, your ability to control risk, your ability to trust process over emotion. AI amplifies all of it. If you are disciplined, it accelerates growth. If you are inconsistent, it accelerates failure. That is the truth behind the promise. AI trading can make you a millionaire, but only if you become the kind of person who can build, manage, and sustain a system that deserves it. And that journey does not begin with technology. It begins with you.